Trent Bradshaw with Bradshaw Financial Planning, and thank you for joining us for Mind Your Money. Wanted to bring you a market update. Today is February the 3rd, 2021. Before we jump in, make sure you join us on social media. If you got any questions, obviously you can reach out to us. Let's touch on the agenda for today. Let's talk about earnings. You'll see that there's been earning surprises so far here in 2021, which is good and it's what we expected. Second, we're going to talk about growth, not only in the U.S., but also globally also. We'll talk about interest rates and also inflation. We talked a little bit about that on our reallocation update, and you'll see that we'll define what we're seeing going forward. It's kind of confirming that particular situation. Last but not least, we're going to talk about stimulus. Where are we at? Have they got it done yet? All right, let's jump right in. The first chart we're going to look at is basically a summary of the asset classes of the S&P 500, and exactly what we expected is occurring. They expected year-over-year growth rates to be in negative territory for the first quarter this year, for the fourth quarter of last year. So earnings have been reported so far. As you'll see on the chart, 216 of the 500 companies in the S&P 500 have reported. What you'll see on the far right of this chart, the earnings growth, it's up just shy of 5%, which is much, much better than expected. And this is kind of where we thought things would be going for the first quarter. We actually think it's going to be even better in the second quarter. In addition to that, you'll see several of the sectors on the right side. Some of them are double-digit growth rates year over year. And again, the acceleration in earnings is something we definitely expected. The next chart we'll talk about is global growth. Looking at gross domestic product, the actual growth of our economy. The United States, you'll see, and we'll have it circled, is supposed to grow at somewhere around 5 to 5.1% year over year for 2021. Hey, in 2022, it's still supposed to grow somewhere in the neighborhood of 2, maybe 3%, and again, we'll circle that. But look at the rest of the entire emerging markets and other advanced countries here. You'll see a lot of negatives in this first column. Well, it starts to accelerate, and these numbers are huge going forward. If you look at 2021 globally, it looks like a 5% growth rate globally. That's extremely good. Then we're going to follow that with another growth rate of projected to be 5.5%. Going forward, which is fantastic. So again, some good news on the horizon here as far as overall growth rate globally coming out of the pandemic recession that we're in right now. Next chart, let's touch on interest rates. We talk about this. Inflation, is it coming back? Well, here it is. If you go back 3 months, we were around 0.75 to 0.8 as far as the 10-year note is concerned, as far as interest rate. Now that has increased to about 1.13%. Doesn't seem like a large move, but it's actually huge. So when we're looking at higher growth rates and higher inflation, that really drives and confirms the portfolio positions that we have inside the portfolio right now. A large majority of that's going to be driven toward high momentum technology stocks. We'll also bring in some of the commodities or energy stocks. You also see some infrastructure and also some industrials coming into the portfolio. And again, this is being confirmed, especially with the infrastructure package potentially coming from Congress in the near future. Could be a great catalyst moving the market going forward. So again, higher inflation, higher growth. Again, it's confirming exactly what we thought we'd see here in the first quarter. We actually think that potentially could extend into the second quarter also. Well, what about stimulus? We always mention stimulus. The reason we pay attention to that, as Congress and the Federal Reserve throws in liquidity into the market, normally that correlates to a market going up. Well, here's some of the latest headlines, and you'll see these pop up on the screen. Basically, there's been no decision yet, but let's face it, this next stimulus package is going to be huge as far as the number, probably in the trillions. 1 trillion, 2 trillion, we don't know. There's still talking between GOP senators and, of course, looking at the Democratic side of the equation. The GOP somewhere around $618 billion for a smaller package. Democrats are at 1.9 trillion. May come in somewhere in between there, but anywhere from 1 trillion to 2 trillion is where we think it's going to fall. The thing is, with that much liquidity, again, coming into the system and money coming into the hands of individuals, we think that's going to be a very good thing for the market. Probably will continue first quarter, second quarter again. So again, kind of confirms what we've been seeing. If you got any questions with the market update that we had today, give us a call. Like I said, join us on social media. Look forward to speaking with you soon. This is Trent Bradshaw with Mind Your Money. Have a good week.